For the Lunar New Year, business was thin, although Japanese, Australian and New Zealand traders were given a positive lead from Wall Street, supported by hopes for China-US trade talks and a slower pace of rate hikes by the Federal Reserve. Japan's benchmark Nikkei index fell 0.2% to close out the only Asian trading of the day at 20,844 points. Wall Street gained on Monday, with technology shares leading the advance as investors were optimistic about the prospects for US-China trade relations and quarterly earnings reports. The Dow Jones Industrial Average picked up 0.7% to end the day at 25,239, while the S&P 500 moved over 0.2% to the good, driving itself to 2,724. The Nasdaq Composite added over 1.1% to 7,347 points. For more on the markets, we cross to Arabile Gumede, who's at the Johannesburg Stock Exchange. Very good afternoon to you, Arabile. The board behind you seems to be matching your tie a little bit.
Yeah, quite a bit, doesn't it? All green across the board today for the most part anyway. The likes of Aspen, however, are unable to get the gains that they would probably like. So it's a green day across the board, as you can tell. Then just behind me, the rand weakening ever so slightly, particularly yesterday, which didn't help those banking stocks either. So a lot more focus will perhaps take point on that. What gives the market impetus? A few trading statements coming out yesterday as well. Perhaps that will be of keen interest as to how the market fares and how things perform. So we'll continue to take a look at the earnings profile, as well as how the markets are doing out in the US as well. But for now, let's unpack exactly what those numbers look like out in Europe and locally. If you could spot a little bit of red in those market pictures, then you could ask yourself exactly where was that and what was going on, because it seems to be all green. So we'll match that all up and get an analysis on it now with Chris Gilmore, an independent analyst. Chris, thank you so much for the time. 0.7%, generally sideways in normal trade, but it's still a good tinge. It is the kind of market we would still prefer, as opposed to a little red even.
Well, it's better than 7/10 down, I suppose. But
Yeah.
This is the theme of the JSE, Arabile. It's been going nowhere slowly for quite some time. We're still in correction territory. We're about 12-13% down from the previous high of January the 5th last year. And as we were saying off air, it's difficult to discern what the catalyst is going to be to propel the market significantly higher from here on in. If we look to the US as the big market driver for all global markets, well, that's got its own problems. You know, I think there's maybe a bit of a bull trap in evidence there. In other words, people getting sucked into this rally that's taken place since Christmas Eve, which it's been quite strong. But if you look at the fundamentals in the US, other than the fact that maybe interest rates aren't going to rise as much as we thought they were, maybe not even at all, then that's about the only positive factor that's really playing out here. And as far as South Africa is concerned, you know, we're stumbling along. We're going to be very lucky to even get 1% growth again this year. So those South Africa Inc. stocks, you mentioned the banking stocks, you look at the retailers, some of the big drivers there, they're going to struggle, I think, for the
retailers getting absolutely hammered as well last week. I mean, the likes of ShopRite coming out with that trading update, that completely got hammered last week as well.
Yeah, I mean, ShopRite, the first time in history, their back-to-school sales in December were higher than they were in January. So, I mean, you know, I was saying to an analyst this morning, this is actually the worst blowout in the retail sector that I've ever seen in close to 40 years of analysing the retail sector.
That is absolutely phenomenal. Wow. Chris, if you take a look at MTN, their numbers came out as well yesterday, and they seem to be gaining and going up 20% with regards to their earnings picture. They're doing well despite Nigeria, not because of Nigeria. How is that happening?
Yeah, well, look, I mean, they've got a good spread in the rest of Africa and in other places. And I mean, they're in some pretty dodgy jurisdictions as well, like Iran and Syria and stuff like that. But I think an awful lot of that is in the base now. So they are moving along quite nicely. It remains a fundamentally very well-run company. And I think, if you can try and put Nigeria to one side, and it's very, very difficult given the fact that it is the biggest single area these days, then the rest of the areas are actually doing reasonably well.
Yeah, again, so it bodes well for them to actually get the situation in Nigeria still sorted, still means very good for them to actually stay in Nigeria as well for the long run.
Well, we thought it had been sorted out a couple of years ago, 2-3 years ago, when they had that first shock to the system. And yet it hasn't been. You're dealing with what is verging on a rogue state, and it's very, very difficult to get satisfaction with the authorities in a country like that.
Very difficult market on that front. We were speaking about the rand a little bit earlier on, now sitting at 13.38 against that US dollar. Yes, weakening slightly, but 13.38 is still a figure we'd all grab at a moment's notice, surely.
Still very good, absolutely. And I think in the wake of what happened last week with Jay Powell, the US Fed chairman, making those dovish sounds about interest rates, then I think it's likely that you're going to have a continuation of this kind of risk-on situation. In other words, there's going to be more of a risk appetite for emerging markets, into which South Africa is conveniently placed. So yes, I think the rand, provided we don't do anything stupid. Look, there are a number of events coming up. We've got the State of a Nation address on Thursday. We've
State
got
of the Union today as well to the United States.
The US. That'll be interesting to watch, won't it? He didn't do one last year, did he?
He actually did. No,
did he do it eventually? Okay, because he's not obliged to, apparently.
No, of course not,
And then you've got the budget on the 22nd. You've got quite a few other events. You've got the ratings agencies looking very, very closely at South Africa. And then you've got the elections. So you've got a lot of latitude for a lot of spanners to be thrown into the works, metaphorically speaking. So if we can avoid the temptation to go back to the bad old days, and I think we will, of scoring own goals, and then I think the rand will go largely in tandem with what's happening with other emerging market currencies.
But as you said right at the beginning, finding the one thing that will then pick us up or give us impetus or spur us in a particular direction doesn't seem to be happening. It's the question of where that's going to come from.
And the other thing, of course, is you look at this overriding influence of NASPERS. I mean, it's so huge in the overall scheme of things in our market that if you get a decent situation materializing with NASPERS, which we had last week with the Chinese authorities allowing those two games to take place, that can have a material influence on the market. So you've got to look at that. You've got to look at the rand. If the rand were to blow out, if you have to see a situation where we got the rand really taking a lot of strain, and I don't see that happening over the next few weeks and months. Who likes to try and forecast a currency like the rand? But all other things being equal, then if that happened, then that would give some impetus, I think, to the market. It would actually move it up quite higher, given the composition of the market.
Yeah, no, at just under 3,000 rand a share there, and I'm sure the fair value is still above 4,000 rand odd, so still some way to go, and it does have perhaps some gas still in its legs, of course. Yeah. I wanted to talk about the general picture then when you have the likes of Anglo-American CEO Mark Kutufani coming out and saying that Eskom is a big risk to their business. This is a company that's divested out of that coal business and no longer want to focus on that coal side of their business, and yet Eskom is still a worry for them. What does that tell you about the broader picture across the South African spectrum here?
Well, absolutely. I mean, if you look at where Eskom's tentacles get into, they're everywhere. Whether it's the consumer, whether it's industry, whether it's mining, makes no difference. Eskom is a huge factor. So Eskom is trying to get, well, it was 15%. Now they've actually raised that hurdle.
1% now for the first year. Yeah.
I find this absolutely fascinating. You know, you're what other country in the world would you have the utility whereby they're making losses? They say, oh, we've actually got to claw back more from the consumer and from the user. It's nonsensical. We have to find an elegant way out of this, and many elegant ways do exist. Not least of which is trying to have some sort of privatization, splitting it up into 2 or 3 different parts, because we can't carry on like this. And Kutufani is quite right. You know, in a mining sense, the deep levels to which gold and platinum miners are going these days across the board, it means that for ventilation, for all this type of thing, refrigeration, you know, it's huge amounts of of electricity that's required, and therefore you ramp the cost up. It's going to be enormous. It's going to be crippling.
Do you think that we're ramping up and preparing for a big statement, particularly on Thursday, regarding Eskom? And I only say that because we've had high time where many people have just said we need to get answers on Eskom, including the unions. The CEO came out yesterday to say that indeed finding a way to split up the business would certainly be helpful. Today, just this morning, Minister of Trade and Industry, Rob Davies, coming out as well and saying that, there will be some big announcements being made soon, and expect a big announcement being made with regards to Eskom. Is it now high time that we're finally making something happen and we're saying that we're going to split up Eskom? Or is the big announcement that government is taking on part of that debt?
I don't think government can take on part of that because there's no money left.
Yeah.
The only way they could do it is to bring back what's called prescribed assets, whereby you take a big chunk out of the government employees' pension fund, for example, and redirect that towards Eskom. Say take two or 400 billion.
Sure.
And I'm sure the pensioners within government would be really overjoyed to hear about that.
Yeah, that's going to hurt. I mean, the PIC itself is just sitting there going, well, we don't really have a complete leadership now structure as well. So for them to take on that mantle in any particular way would certainly be hurtful to that picture. All right. Anything else in particular you're sort of looking forward to? I mean, particularly this week, earnings results, a set of, good amounts. I mean, for example, we've got Sasol there right at the top, more than 4% to the good, and that's based on that oil price as well, rising beyond $60 a barrel.
As we were saying off air, Arabili, we've had some good trading updates out this morning. We've had Curo, we've had Anglo Platts coming out. We've had Imperial, and these were, I think, largely better than expected. And as the month unfolds, you're going to get a lot more of those December year-end companies coming out with their results. Interestingly enough, many of those are going to be consumer companies, retailers, and they're not going to be good. We know that. We've had the trading updates already. But it's sprinkled in amongst there'll be some other ones. So I think we've got to look out and try and find some of the little positives in there, because there will be a few.
It will be a difficult one. Have to find the positives. For now, there's a positive tinge to the market and how it looks. 0.8% to the good. Chris Gilmore, investment analyst, joining me then in his studio, of course, here at the JSE, unraveling and unpacking that market picture. Things aren't necessarily looking too rosy when you take a look at the outlook, but just how well will President Cyril Ramaphosa truly show the state of the nation? The mining indaba happening right now. Have we really encouraged investors to remain in South Africa, particularly in that mining sector? Have we created the enabling environment we really need? Are the commissions of inquiry actually helping the scenario and the situation in any particular way? And is it doing any justice for our goodwill as a nation? All those questions hopefully will be answered as the year progresses. And of course, we'll have that for you right here on Point. For now, that's where the buck stops, and we'll join you right after the short break. Do stay tuned.